finance ABCs, right?
It's absolutely my pleasure to be here with you, and I salute you for your wonderful channel. Your channel is very, very good.
Thank you so much. Like trying to make it like easy to understand. It's quite a hard thing to do when we talk about options, but trying my best. And I understand. So your channel is like finance related. You talk about options, but you also talk about. I understand finance more in general. Like I watch some of the videos which are more about economics, not necessarily like options focus. Is that right?
Yes, absolutely. I started it basically with the goal of advancing financial education. You know, I talk about mortgages, I talk about credit cards, I talk about investing in the market, and I have found that there is a fan base for options traders out there. People
Mm-hmm.
really are into
Yeah.
talking about options because people want to learn how to live off their trading profits, and they think that by selling calls, covered calls, that they can make $100,000 in a year. I mean, some YouTubers advocate this, and they say with a small amount of money you can do this. But I don't know. I guess the appeal of it is to be financially independent, and
Mm-hmm.
have the ability to relocate anywhere they want to live and not have to devote time to work and things like that. But it's very sexy and cool and everything. But I don't know that it's possible to do that. I mean, with a bigger account, sure. But what do you think? Is it a scam or is it a pipe dream, or
I
can you
mean,
really?
like when of course like there's no secret, you cannot make money if you don't have money at first. Like that's when it comes at least to the stock market, that's something that is a sad truth, and I wish it was different, but it's not. Like that's just how it is. Like if you don't, you cannot create, except like if you, let's say, take a lot of risk, or if you're extremely lucky, it's possible that you can generate a ton of money at once. But what is sure is that going from a small amount of money to a very large amount of money in a very short time is almost impossible. And anyone who says that they have a consistent way of doing it, they're lying. They're just lying. And it's sad and unfortunate that there are some people that promote this type of things. However, I think that they're playing on they're playing with something that, as you said, for people is very important. Like people hold on to that financial independence. And there's this very big concept society, in our culture, of passive income, financial independence, trying to make your own decisions and be financially free. And they're playing on that, on people's emotions, which I think is very unethical. After that, people do what they want. If they can look at themselves in the mirror at night and sleep well at night and everything, good for them. I don't think that's very right. And that's why if they are showing their P&L, and if they can actually prove that, and they can actually prove that they can do it consistently, then I'd say good for them and great for the people that buy the thing. But if they don't show anything, then maybe that's a red flag, as we say. Maybe there's some questioning to be done. Is that person legitimate? Why are they saying this? Because usually what happens is that anyone who tells people that they can actually do this type of things are financially rewarded for actually saying this. So there's a conflict of interest. So that's why, like, I have like for me it's kind of hard, because obviously it doesn't get as much views when you make your videos, when you talk about the real truth of it. However, you cannot start lying just for the sake of getting views. Like you can't.
I agree with you. I haven't gone that low yet. But everybody has their price, right? But mine is not quite there yet. I mean, people say blatantly, I have a $200,000 account and I make $100,000 selling covered calls. And I say to them, how is that? I mean, you're talking about a 50% return. I mean, not even Warren Buffett does this.
Mhm.
And I don't know. I mean, some people that I quite respect say that they can make 2-3% return per month, and that's, to me, that's very, very impressive. I mean, what I make doing options is about 1 or 2% per year on top of
Mhm.
the return of my long portfolio. Like if I have
Mhm.
I have a long portfolio and I write covered calls and I write cash secure puts against my margin, and I increased my return. Like for example, the year to date to last week, my portfolio is up 28%.
Yeah.
Because the S&P is up 25%. So I'm beating
Yeah.
it by 3%.
Yeah.
And that's excellent. I mean, I think that's outstanding. But I mean, compared to people that say that they can make 30-40% return in a year, that's quite humbling to me. You know,
And you're even nice to them, because they would say that they actually make 30% or 40% per month, if not per day. Like that would actually be more like accurate. But after that, like when it comes to options, personally, like I would tend to, for example, this year was a great year for me in terms of selling options. And of course, the market went up, and of course, the market generated just by itself like great returns. But it was also possible. Like for example, I had started this portfolio where I'm not sure if I thought the connection got lost, but yeah, I started the portfolio that I had, and I started documenting it like publicly on YouTube, and it started with 12 grand or something in my TestyWorks account, and I added more money into the account throughout the year. But now I'm up $5,000 on this account, like that I document publicly on YouTube. So it's like roughly like a 20%. The problem is, as I add more money into an account, it starts diluting, the return, and I cannot really have a real way to track it, because I added more money throughout the year. So it's kind of hard, like to know exactly the return. But I think it's possible, like to make some nice returns, especially when it comes to small amounts of money. Let's say that anything that is like under like 100-200,000, it's possible that you can make some bigger returns, because if you trade with $1 million, then you cannot afford to take the same risk as someone who would trade with $1,000 account. There is like, obviously, the pressure is not the same.
absolutely,
And
absolutely.
I think it's possible. I think it's possible to generate some nice returns and everything. After that, we need to, I think, recalibrate a bit, like what is real, and like it's only good to really realize what is true and what is false, because it really helps set up the right expectations, and at least you're going in that game knowing what is possible. And if you already just generate, as you said, 3% more above the benchmark, it's already amazing. Like you're already beating so many people, like majority of people. And that's something that we need to recalibrate a bit and consider, like, because of course, like when you see those people promoting all those things online, my vision is that I just don't mind them. I just, they're just doing what they want. The challenge for me is trying to make it as interesting as possible, and trying to get as much views as they're getting, but without falling for this type of things. And that's a bit the challenge, and I'm up for it.
Yeah, no, absolutely. I think, when people say, well, I started with an account of $25,000 and I ended up with 100,000, but I actually added $50,000 during the year. The actual return was 25%, and the impression they give is that they actually tripled their money. And it's unfair to the viewer, because
of course,
it creates false expectations. People are going to think that actually do this, but the reality is that the professional money managers, the professionals, the people that manage those huge mutual funds with billions of dollars, they don't match the performance of the S&P 500 index. They don't. 90% don't, especially when you load up their fees. So maybe 10% do, and they have an excellent performance, and that's what they're getting paid for. But many just don't match it.
Now, on that note, what's interesting when we talk about, for example, like money managers or people that like are going to manage mutual funds, because they have so much money that they're managing, they're not going to go on the same opportunities as retail traders. Retail traders, because they use less money, they can exploit opportunities that big money funds cannot, because they just don't have enough liquidity. So for example, like a very good example of this is earning trades. Earning trades, if you have like, a $10 billion account, you cannot do this. You cannot sell a short strangle on Bank of America and then buy it back the next day, because there's not enough liquidity and you would never get filled. And if you're trying to get the same return, you would just never, it wouldn't go through. And that's where us as retail traders, we have also our own advantage, because we can play on this type of things, like where they need to focus on other bigger opportunities with bigger liquidity, we as retail traders and so smaller accounts, we can benefit from those opportunities. So I think both have like, their own advantages. Like that's why I think it's great to also be a retail trader. We can, as I said, benefit from earning trades. And I saw your video, I saw that you had taken some earning trades. Like you also had like a bit of fear, I understand, on JP Morgan, right? That was a bad trade if I remember well.
That was underwater for a while, the JP Morgan trade. Yeah. And, Warren Buffett says that, the law of large numbers, when you have, a company like his, where you have $500 billion, you can't think, well, I'm going to invest in this, $25 billion company, because you would have to buy it all for you to move the needle in terms of investment returns. So he has to look at, trillion-dollar companies like Apple in order to buy 10% and ride it. His pool of investment opportunities is limited compared to retail traders, where you can
of course,
you can have more opportunities.
Yeah, of course, and that's why, like for me, I personally love also doing it, like managing my own portfolio. I think it's a lot of fun, and I think that's great to not only invest, like in shares and go long and just be really passive and earning dividends. I think it's a great way to do it, but like learning how to sell options, and it develops a lot of skills. Like for me, I really do believe that, for example, selling options or trading options in general, it's a skill more than like a course or whatever it is. It's really like, it's like riding a bike, like you don't learn how to ride a bike by just doing a course. You actually learn how to ride a bike by doing it. And it's like selling options. You learn how to manage your portfolio. You learn how to be both long and short, how to roll your trade. And for example, I had made a video very recently on a Bank of America call that I had sold, where he went against me. And I don't know if you had, I think you had commented on this video where I lost 700% on that trade. The trade is now coming back in my favor, but it's by rolling the option, and then you start adjusting it, and you do all of those things. And when you give yourself enough time, especially when you sell options, it usually comes back in your favor, at least by a bit. So that's this type of things that you learn how to manage.
Yeah, in a rising market, everybody's a genius, right? If you're selling puts, eventually you're going to be right.
Yeah, sure.
Just today, I sold a call on Berkshire Hathaway because I was rolling a call that I had sold previously that expires this Friday.
Right.
And I was, obviously Berkshire has gone up a lot. And so I was underwater there. So I bought that call back, and I sold the March one for $16, and I bought the one I had previously sold for $7.
Okay.
And that gives me a tax loss on the option selling part, but then I have a gain in the long stock, so I really don't have a loss, but I can register a loss for tax purposes to offset some of my taxable gains this year.
Yeah, so I understand obviously by what you said that you're using covered calls as a strategy. What other strategies are you using?
But let me tell you about this one, because it's interesting that my strike price was not out of the money. My strike price was 275, which is about $6-7 in the money, and I got that intrinsic value back in my premium plus some time value, and so that provides a hedge for me, so that if Berkshire comes down for any reason up to 75, I'm even, because I already got that money back. So that's a hedge that I do from time to time on my covered calls. Instead of just doing out of the money calls, I sell them at the money or a little bit in the money. I also like to do cash secure puts, but I sell my puts not with the cash in the account, but rather with the margin borrowing
on margin
capacity that I have, because I don't like sitting with 10 or 20% in cash in the account, which is the notional value of the puts that I sell is about 10 or 20% of my entire portfolio.
Yeah.
So I think that's fair, because if
I mean,
it goes down significantly, I can hold that and I can roll it like you say, and eventually we will be right.
Yeah, exactly. I mean, personally, I also sell, for example, options on margin, not necessarily like cash secured. And I have a rule that I tend to follow is like I want the trade, the buying power required when you're gonna sell the option, it has to be less than 2% of my net liquidity. And that's what I do when I sell puts on margin. And by doing so, the thing is when you sell options, if a trade goes against you, easily the buying power is going to triple. The buying power required is going to go from, let's say, $500 to $1,500 if your put goes in the money. So that's why I always try to keep my position size very small and around 2% per position. So if it gets really badly in the money, then at least it goes like to around 6% of my buying power used, and it's not that bad, and I can afford to roll it without like losing sleep at night, because that's really the most important thing. Like I mean, I think like everyone has had like some sleepless night because of training. It's definitely not like a good thing to go through. So for me, that's really the most important thing, being able to sleep well at night, doing my thing, and not worrying about positions, because I know that they're so small. Like, for example, like Bank of America, I mean, honestly, it's one trade. And when you keep your sizes small, like it's so nothing for you that it's not even bothering you. And you can actually afford, like financially speaking, to roll it without any trouble, and it doesn't even bother you.
Yeah, it's what they call the gut check. If
Mm-hmm.
you have trouble sleeping at night because of that exposure, then you're probably being too aggressive. But by the same token, if you have a small wager, then the return is not going to be, if you're right, the return is not going to be material enough to move the needle.
Yeah, that's why you have to play the law of the large numbers. You have to play the number of occurrences. And if you, for example, like this year, I was looking at it this year, basically on a year-to-year basis, I'm making around like quite a lot of trades, like around 1,000 trades, 1,500 trades in total, back and forth. When you do this over and over and over, that small gains that you had on one trade, it might not represent much, but over the long term, it starts actually moving the needle properly. And the great thing that happened over the recent years is that the commissions are not even a problem anymore. Like prior to 2018, I think it was 2017 when Robinhood really proper changed everything. Like, commissions were like around $10 per option trade. And now it's not even like, $2. It's nothing now. And except if you have like a $500 account, it can be a problem. But if you have like, a bigger size account, commissions are not at all a problem anymore. It's nothing compared to what it was like pre-2018, 2017.
I have my account with Interactive Brokers, and
Right.
since the beginning, they just charge $1 per
Right.
contract, in options, and even less for 1,000 shares of stock. So tell me, what has been your return this year? How well?
So this year, in my account, 1st of January, I started with $12,600 in this account that I put on Testyworks. After that, I added more money into the account, and I would need to check exactly how much. But in terms of P&L, if I go in my Testyworks account, it's $5,000 of P&L that I earn. After that, because I added money into the account, it's not like I think I did $5,000 more in total, so I probably like or $10,000 more or something, because I added some money. So yeah, it would be basically, I think, around like a 20%, 25% return probably on my whole money. But it's kind of hard because when you add money throughout the year, then your returns don't really mean anything, because you haven't even started exactly at January 1st. And if you put more money on May 1st, then it dilutes the returns. So it's kind of hard.
You have $30,000 now then?
Yeah, basically like this account right now has, I think, around $27,000, like, or something like this. So minus $5,000 of gain. So I've put basically $22,000 in total for my own money in there. And now it's $27,000.
So with that size, you are making thousands of trades on options?
Yeah.
That seems to be very active.
Yeah, that's pretty active. Like especially when when the VIX is like was as high as, for example, like what it was especially at the beginning of 2021, not necessarily now, but at least at the beginning of 2021, it goes very, very quickly. You know, when you have a VIX like around like 25 or something, I mean, that's, that's a bit the counterintuitive things when you're selling options is that when it appears as being more risky to trade, meaning when the VIX is higher, it's actually the moment to trade because that's where option premiums are higher and there is more risk that is being priced in. And there's not necessarily more risk in terms of economics. Like that's actually when nothing is happening, when the markets are being complacent, that there is the most risk happening. But that's a bit counterintuitive.
That's very interesting. And tell me something, in YouTube, how much money are you making per month on an average month?
So right now with my channel, so the thing is, what's good when we talk about finance on YouTube is that we are being paid more than someone who would, for example, like talk about a random subject. So basically, it's a couple $100 like that number, yeah.
I'm sorry, you froze. You said a couple of $100 a month?
So sorry, what did you say?
You froze. The
Yeah.
internet connection is not stable, but
yeah, I said basically it generates like a couple $100 a month, like from having like around 18,000 views. That's pretty decent, when you are like in the finance niche on YouTube, which just like not that many views, you can actually have like quite a lot proportionally speaking.
Just this month I started monetizing. And
nice, congrats.
It's been only a week and I already have like $14.
Nice, yeah, that's not.
Which is amazing because I hardly have any views. I mean, I don't have 18,000 views a month.
Connection lost.
So
that's not. Congrats on being monetized. I know it's a long journey, to get monetized.
It's very exciting. Yes. I feel like I just got admitted to the party.
Yeah, honestly, like it took me like, so I started my channel basically in April 2020, but started posting in August 2020, and I got monetized in June 2021. And same, I was extremely happy when I got monetized, and same feeling being invited to the party finally.
Yes. So what are you gonna do in terms of options trading going forward? You're gonna continue to
yeah, so yeah, I'm definitely I'm going to be more careful now that the VIX is going lower and lower, and the markets are, I mean, honestly, this year has been insane in terms of returns that the SPY had. So it's a bit scary when you see that the markets are going that high, and they're not necessarily, in my opinion at least, very representative of the economy in general and what the people are experiencing. I mean, you see that the SPY, if I'm not mistaken, if I just quickly look at the SPY chart, I think it basically gained around like 25% in a year or so, and from the bottom, it was like around more than 30% or so. I mean, have you seen any real change in the economy, like, or at least in the people's lives that actually justify this type of returns? Personally, I haven't. And that's a bit scary to see that, in my opinion, because, we're only taking like we're only going higher to fall harder, like.
Yeah, the S&P has actually doubled from 2019 level.
Yeah.
And 2018, even with the pandemic, 2020 it went up like 18%, and this year to date is 25%. So that's amazing.
Yeah, that's a bit scary because it's a bit like when is it going to stop, and how hard is it going to be, like when it's going to fall? That's a bit what worries me.
Well, what you have to look at is, for example, the federal government, the US government, is going to spend an enormous amount of money in infrastructure spending and in social programs next year. And that obviously is going to help a lot with the economy, and it's going to create some inflationary pressures. And as you know, companies just increase their prices when their costs increase, so their profits are protected. And so the stocks tend to be a hedge against inflation. And so I think obviously in the short term, anything can happen. But longer term, I think the party will continue.
Yeah, That's why from a more like option perspective, I'm always keeping quite a long bias. I'm always a bit long biased. I'm going to sell more put options that I'm selling call options. I just like to be more also exposed on the short side by selling call options because I don't like to have only one side of the market. But for sure, I mean the I think the obvious answer is that it's probably going to continue rising. Like that's probably, I mean, that's what has been happening for a long time, and that's probably what will continue happening. And but as you say, on the short term, anything can happen. And when you see the magnitude of the crash that happened in February, March 2020, it was like, we had never seen this. Like I remember like, luckily I wasn't like too invested in this and I didn't lose money, not as much as at least like a lot of people, but I remember seeing the markets falling by like 3% a day.
That's scary. 3% a day is a huge move. So one thing that I'm going to do going forward is I'm going
Yeah.
to look more into doing weekly options. I have not done weekly options in the past. I usually just go with the monthlies. But I'm going to look more into that to see if there is something there, because a lot of people say, well, zero DTE, days to expiration, and they have these trades that they do, and if you have a trade on a weekly basis, you don't have to have a large exposure to make a good return.
Yeah, the thing is with weekly options, I personally only use them when it comes to trading earnings. But the thing is, when you trade weekly options and so a shorter time frame, you're going to have like more gamma into by nature. So the P&L fluctuations are going to be bigger. After that, like personally, I mean, if someone is fine with bigger P&L fluctuations because of weekly options, I'd say fair enough. But like there's going to be more volatility, that's for sure, but there is also more like time decay, which is also a plus, like when you sell options. So it's a
But if you do like a credit spread, you put it on Monday for the week or for until Wednesday,
right.
if there is a problem, then your maximum loss is limited.
Yeah,
And if there is a gain, then you make money. And if you play an average, like on average, 60-70% of the weeks it goes up, then you make money 60% of the time. So
for
maybe
sure.
I'm going to look into this. I haven't done it yet, but that's gonna be my game plan for the rest of the year and beyond. Because I agree with you, the market may be a little frothy, and so that's why it's good to sell some calls into this strength.
Yeah.
My Berkshire trade of selling that contract all the way to March with a strike of 275 provides me downside protection up to 275 between now and March. So
Mm.
I feel very comfortable with that one.
Yeah, just hurts. It just hurts more when we're selling calls. And actually, I had like seen a great tasty short study that I really really liked. They were showing how long does it take for a bad trade to come back when you're selling a put versus selling a call. And what they were showing is that when you're selling a call and it goes wrong, it tends to stay longer in the money, obviously, because the market tends to rise. So obviously, it's going to go longer against you. But then when they come back in your favor, that's usually very sudden, compared to puts where it tends to go very suddenly against you and then grind up back in your favor, because obviously markets tend to fall a lot harder and then they grind up slowly. But that's actually quite interesting. But honestly, it's quite funny because even if like I had like losses during the year in terms of trades, calls, for example, that I sold, by just rolling over and over in 2021, I don't think that I had actually one loss at the end after having rolled like several times my trade. Like they all came back in my favor at, or if they haven't, I think it's probably like a minor loss that can almost be, discounted. But that's quite crazy when you give yourself time, when you make sure that you roll your trades and that you trade small, it's usually going to come back in your favor.
And you usually roll them on a monthly basis, or you
Yeah.
longer?
Yeah, monthly basis. Like that happened like for some trades that I had. Actually, I have like a bad trade going on right now, which is on EWZ. So that's the Brazil ETF. I to tell you basically the put that I sold on EWZ, I had sold 36 puts on EWZ. And now the stock is at, I mean, the ETF is at $29. So this one is going bad against me. But once again, like, it's, if you make sure that you give yourself enough time, and, I'm there for the long term. If I need to roll it like for a year, every single month, let's do it. The good thing is that when you're rolling, you're improving your cost basis every single time.
Yeah, and you are getting time value, and that time value is your profit, so that helps reduce your loss.
Exactly. So like the time is playing in your favor, and by just rolling, you're collecting a credit every single time. Your break-even point is widening. Like, it's a matter of time until it comes back against you. The question is, how long is it going to take, and can you actually sustain the drawdown while you are in the trade? That's more the question. But otherwise, I think rolling is an amazing thing.
It is. I actually learned about that from David Jaffe from Best Stock Strategy.
Right.
He's so nice. He invited me to my first collaboration. I had never done a collab before, and he actually saw my videos and searched me out and invited me to do a collab with him. And that really gave me a boost to my channel, because I think I had like, I did that in May of this year, and I had like a 500 subs then. But then, he has almost like 10,000 subs.
He has like, I think, around 25,000. Yeah.
And so he gave me a shout out, and I had a lot of his viewers are also fans of options, of course, because that's what he does. And so I found myself doing more and more option videos. But who knows? I did my car video today, and
I saw that.
I have seen car review. The other day, my wife was looking at a Tesla review that has like 2 million views. I mean, this is a video of 3 or 4 months ago.
Yeah, I love YouTube. That's why I love YouTube.
2 million views on a car review. So I said to myself, well, let me do a review on my crappy Lexus. Maybe when I get the Tesla, I'll do a review on Tesla. I don't know
exactly
how many
views.
Yeah.
I don't know if you saw that, but every YouTuber that at some point like gets a bit big, they are going to have a Tesla, and they're also going to make a Tesla review video. That's always the same pattern. That's very funny. But honestly, if I had a Tesla, if I was doing this, if I was bigger and stuff, I would absolutely do it too.
Yeah, and the amazing thing is that they say afterwards, oh, this is my Tesla video, and I made enough money to pay for the Tesla just with this this one video.
Honestly, I don't blame them. Like, I think that's great. It's like, when I have a loss, for example, on a trade, like the Bank of America loss video that I did, like the YouTube money just pays back a bit the loss that I had on the trade. So, I absolutely don't blame them. I absolutely do the same. And I think that's a great way, because the good thing is, you tell people that you had a loss, you show that it can also go wrong, and you also recoup some money from YouTube on the loss that you had from trading. So, why not? Like,
Exactly. One of these big YouTubers like Graham Stephan and Kate O'Brien. I mean, these guys, they make like millions of dollars off of YouTube.
Yeah.
They can't. Yeah. They can. There's only enough houses they can buy. So what do they do with their money? They put them in the stock market, and so they say how much money they make in the stock market, and they make a video on that. But they get money from YouTube, and so it's a vicious cycle. You get more.
Exactly. As Graham Stephan would say, that's the monetization circle. You're just a monetization loop. That's very funny. I think. Well, obviously, I don't do it as the same scale as Graham Stephan, even though I wish. But that's still funny to do. And but yeah, it's funny because David actually, he had also reached out to me. It was back in June, And funny enough, I was already watching his videos like. Even a year before that, like even in August 2020, I was already watching some of his videos and stuff like this. He was doing a lot of reviews, and that's why I liked also about his channel. Like, he was really going, hard on everyone on YouTube, and saying the truth on every single person that he didn't like. And I thought that was funny to watch. It's like I had seen your video on I forgot his name, on a guy, on a YouTube guy, like he's called Matt something.
Oh yeah, uh, Matt. I think
Uh,
I've done collaborations with Michael Kuda, could that
right.
be it? Or Ernie Varitimos, the Zero DTE guy.
Oh yeah, 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 yeah,
And
yeah, yeah, yeah. I remember that video.
Lucien Rojas from New York, Leroy Janser, and Steve Lello from the UK. Actually, I did
Mm-hmm.
a collab
Mm-hmm.
with him last week. Actually, yeah,
Yeah, isn't it the guy who had like the questions on the background and stuff? Like
yes,
he had like a slide. Yeah,
yes,
okay.
exactly. Disruptive wealth creators.
Got it. Got it. Yeah. Yeah, yeah, yeah. I see what you mean. Well, I remember what like I liked your thumbnails because you have like literally printed like, you know, the faces of the people on the paper and showing it like on the thing.
Yeah, you have to excuse my lack of technical ability, you know, but I think there is value in the concepts and the investment.
Which is, you know, like
And some people make beautiful videos
for sure.
edited and with FX and everything, but they talk about market timing and they talk about stuff that is flatly wrong, and viewers eat it
Yeah.
up. They eat it up and they have like hundreds of thousands of views, you know, like the people that talk about velocity banking. Have you ever heard of that? I
No,
mean,
never heard.
the only reason velocity banking works is because there is a profit, there is a earned income that the person has. Like they make $5,000 a month and they spend 3,000, they have 2,000 left for savings, and they take that 2,000 and they pay down the credit card, and then but
Right.
it wouldn't work if you didn't have that income. Most people live
Mm-hmm.
paycheck to paycheck, and so they make $5,000 and they spend 5,000. They don't have 2,000 extra dollars to play around with velocity banking. So
Mm-hmm. Mm-hmm.
that's, I think that's a big hoax out there, and I've made videos, you know, unmasking that. But you know, it's not very popular because there's a lot of people that want to believe that it's true, that there's a magic bullet out there that is going to
Yeah.
save them from their financial
But
problems.
yeah, but honestly, I'm not, you know, like I'm not casting stones and everything at people who believe this. Like I was also, you know, when I started, like I started basically getting interested on let's say like this, like in trading when I was like in high school. So, you know, like quite early at least for a teenager to get interested into this. And the first thing that you see when you go on Google and type how to, for example, trade stocks is you're going probably the first thing is about technical analysis. You know, that's probably the first thing that you're going to see. And then you obviously go down the rabbit hole. And then, you know, the problem with this is that there is so much confirmation bias that is happening in the trading industry. And, you know, it's still like, for example, to this day, I'm always questioning myself. I'm like, isn't it like confirmation bias? Am I sure that this actually works? You know, I'm always trying to question myself and always trying to doubt my own beliefs so I don't fall into this.
Yeah.
Because that's so present that, of course, if someone tells you like, you know, when the line breaks here, you buy, and then it happens, you know, you're going to start believing it. And the more you do it, you know, the more you're going to believe that.
Yeah, the worst.
And when it doesn't happen, you think that it's just bad luck. And, you know, in the end, after that, if people are making money in the end, you know, I'd say fair enough. Like that's great. Like that's the goal, you know. But the thing that personally helped me is always trying to question like the beliefs that I have. Like, am I sure? Like, what data actually supports this type of claims? Like, you know, and also what is is there a conflict of interest? Like, for example, you know, like a lot of people are going to criticize like tasty trade, or for example saying that they obviously are incentivized to tell people to trade a lot because they have a broker, and so the more people trade, the more commissions they're going to earn. So you obviously always need to understand a bit like the, you know, the environment and the context that you're getting in, like, you know, what supports who and what is the conflict of interest. And that for me, when I got into training, like I was, you know, I was the perfect person to scam because I went straight into it, you know, like I was getting straight into it, perfect system, you know, I would just take out my credit card and just pay like this, you know. And but after a couple of years you learn, and and then when you discover options, the moment I discovered options and especially selling options, I was like, okay, it clicks. Now I know that there is something there. There is obviously something that is more mechanical, that is not like guru or anything. There's something that is very logic. Like, if you sell options around the 10 delta, you're going to win 90% of the time. That's just a fact. It doesn't mean that you're going to make money in the end, but you're going to win 90% of the time. And then after that, by rolling, you can manage to actually come out of this profitable, as long as you still trade small, etc., etc. So that's why for me, like, I don't cast stones at people who do go into this type of things. Like, I've been there also.
Yeah, it's like, the worst thing that can happen to somebody that doesn't know anything about trading is that they try to time the market and they actually make money. If that happens, then they are hooked, and then they're going to expose themselves to bigger losses down the road. It's like going to the casino and putting your money on one number and winning. You're going to be hooked, and you're going to gamble your winnings and more. And so, with Bitcoin, I see that the Bitcoin has been going up in price, and a lot of Bitcoin advocates say that is confirmation that they're right, that the Bitcoin is a good investment. How do you feel about Bitcoin?
I mean, honestly, I personally have like some cryptos in my portfolio. This is not something that I share on my YouTube channel because I talk more about options, but I do have cryptos. And Bitcoin in itself, I prefer, for example, Ethereum. If we talk about cryptos, I think the practical applications of it, like the infrastructure that it creates and the real world applications that can be made thanks to the blockchain technology, I think it's, personally, my humble opinion, I think it's the future. It's going to come sooner or later. After that, will it be under the form of Bitcoin, Ethereum? No one has the answer. But in my opinion, that technology is, of course, going to become the future for plenty of reasons, such as decentralization, because obviously, we tend to go as, industries, for example, with the start of Uber, where it was becoming a shared economy. Like, we tend to go toward decentralized models on everything, and all the industries are being disrupted. You look at Airbnb, there is no centralized power anymore. It's all decentralized. So for me, the blockchain technology is just like the following step. It's just the next logic step that is going to happen but like this time to a more like infrastructure level. Because one with the internet is that internet has never been built to become like a way to exchange money. It has become a way to exchange information, but not money, not at least safely. And that's why the blockchain technology is there for, and everything is public, and there is, it's uncrackable and all those things. So for me, it's the future. After that, Bitcoin in itself, I don't know. What do you think?
What kind of percentage of not that crypto do you have in your portfolio?
Yeah, it's small. It's like a 3% or 4% of my portfolio.
Okay,
not much.
That's reasonable. That's reasonable. So what do you do in your day job?
So I'm basically working in a sales department of a company, actually a US company, American company. Even though I live in Europe, I'm based in London. I work for a US company, and I work in the sales department for the French market because I'm French, as you can hear.
Yes, that's very commendable. I think you have done something good in learning by yourself through YouTube and through Google about investing, and I think you have it. You're contributing in your channel with honest information, and that's very remarkable. That's there's a lot of people that want to exaggerate their performance to get views, and to make people believe that they're experts. But I think you really are smart, and you have done your research and your homework, and you provide value. And
Thank you.
I am proud to be able to do a collab with you.
Thank you so much. I really do appreciate it. But yeah, I mean, that's I try, and let's see where my channel goes. And I saw that you had reached 1,000 subscribers like recently, and off to the next 1,000 soon, I guess. Like once you pass 1,000 subscribers, it goes a lot quicker. Like I mean, personally, I mean, it's never quick enough, but it goes quicker at least.
Terrific. So thank you so much. Do you have any closing remarks or closing thoughts?
I mean, I'd say if subscribe, if people from my channel are watching this video, then I'd say go subscribe, or at least go check out your content. What I like about your content is that it's more like economics in general and not necessarily trading focus, which is always good to have in terms of more broader knowledge, and that always helps when it comes to after that more granular things like options.
Wonderful. And I say to my viewers to check out your channel and see your content, which I think is very specific and very, very good.
Thank you so much. Thank you so much. And I guess see you next time, maybe for another collab. And yeah, let's stay in touch.
Absolutely. And if you come down to Puerto Rico, give me a call and let's have dinner.
Let's do it. Let's do it. Thank you so much.
All right.
Bye bye. Have a good one.